record it as well, actually, just in case anyone wants a copy of it at some point or something. But it was mainly to give people a bit of an insight into sort of like how I look at the market, how I identify support and resistance, how I use it. You know, there's plenty of people out there who will try and tell you that support and resistance and trend lines and stuff like that doesn't work. It's completely fucking irrelevant, if I'm completely honest. You know, everything works. You know, Elliott wave will work for some people. Harmonics will work for some people. Using moving averages will work for some people, right? I feel like as a trader, there are too many people who think that there's only one way to trade. And you know, you can only be bullish or only be bearish, especially in the crypto space. Like I don't really trade crypto very often at all. You know, in terms of me trading and how I trade, you know, I make a little bit of money in crypto, but I do not make a lot. Like since I started touching crypto in 2016, when Ripple was kind of hyping up, and on that crypto kind of bandwagon and crypto hyping up, I made about 18 grand off Ripple. When it went to like $3 something, but I got out at about 280. I only put about 1,500 quid in, but I bought it at like 27 cents or something. It was really fucking cheap when I bought it, and I did okay off it. I made about 18k, and then I did the same again with a similar coin, which is just shit. It's just an absolute shit coin. Those of you who are in the crypto space have probably heard of it. It's called SafeMoon. It's fucking crap. Like it has no purpose, I don't think. I don't really know too much about crypto, but what I do know is you can put $1 grand into a really shitty coin, and for some reason, when all the coins go up, like it's retarded. Like you put money into a coin, and as long as you manage your risk okay, like even if you put like 100 quid in, when those coins go up like double or 5 times or 10 times, just pull the money out. Like you've absolutely cleaned up. So that's kind of what I did. And I put a little bit of money into that coin. I made like 20 grand here and there a couple of times with like $1 grand, because it was going up really aggressively. And it never went up far. And I've got a little bit of money in it now, but not a lot. And I'll just sit on it until it goes up again. And when it goes up again, I'll put some more, I'll pull some more money out. But I don't really trade crypto. So like where I specialize in, I'd probably say is Forex. I look at indices a little bit, but the main kind of place where I trade is all Forex. And I don't trade like many traders, like in terms of how I trade, right? I don't know, I've got capitals on everywhere, but in terms of like how I trade, it's very I suppose I scalp basically in a nutshell. But to scalp in a Forex market is, you know, you can't really, you know, scalping on a minute chart isn't like what it was. The volatility is not really there. So it's kind of more really small wins with really good risk management, apart from when Donald Trump tweets and you get slipped for like a shit ton. I sunk like 20k that day. This was like an account that I ran up a while ago. I'll find the thing actually and show you guys. But I sunk a lot of money because of Donald Trump. And then I'll go into kind of like how I trade. But yeah, Donald Trump tweeted something about China in July. Something to do with tariffs, I think it was. Chinese tariffs in July. It was like 2018 or something. And I literally, that's not the one. Wait a sec. Let me change this to monthly. Yeah, wait. Here we go. There's a few. Right. So there was this month here where that was a small month. I was basically just growing a small account, just for my FX book, just to basically prove a fucking point. And that month was 19k, cleared 19k. And then this month here, I think, is where Donald Trump fucked me in the arse. Yeah, here you go. So that is huge, right? So I lost 5, 10, 15, 19 grand. And I also had another account that was doing it at smaller size. So I had 2 accounts running, taking the same trades, basically. One was high leverage and one was low leverage, just to get like an accurate representation of sort of like how much you make per month in terms of percentage gains. Like that's obviously like a really good month. And anything between 8 and 10% is like your average month, right? So nothing special, but a really good strike rate, 85% longs, 85% shorts over 207 trades, which is really, really high. Good profit factor. The problem is my average loss was really fucking scuffed because of the slippage. So the day that I got slipped, it completely skewed the average loss. But in terms of identifying support and resistance, how I do it and things like that, that's probably like one of the main things. And then how I trade, I just trade a really simplistic pattern and I only trade at like certain times of the day. So like in terms of how I identify S&R, like obviously I would imagine that the majority of you have heard of what an order block is, right? Or Lego block, or whatever you want to call it, or whatever you want to take the piss out of it for, or however you like count what they are, right? So, you know, an order block is basically a bullish candle before a bearish move down, like an aggressive bearish move down, or a bearish candle before some bullish candles going up. That's the fucking in and out of it, right? It's basically supply and demand. It's the last candle in a supply and demand zone before it goes up, or the last candle in a supply and demand zone before it goes down. That's the easiest way to word it, right? Let's be honest, like everything's been fucking reworded, rephrased, rehashed into all sorts of shit, right? Now, loads of people use order blocks in different ways, right? So you get people who use order blocks who use the wick, who use the body, who use the candle, who only use the body, who use all sorts of parts. They'll use the wick the first time it's touched, then they'll use the top of the body, then they'll use the center of the candle, then they'll draw a fucking Fibonacci over it and all this bollocks, right? My advice to you guys, don't use them for anything other than the middle, right? If you just put a line through the middle of an order block, just use it as S&R, right? The middle of an order block, and the way you choose an order block is look to the left and see if it's acted as a good level of S&R in the past. Because all you're doing is trying to identify a half decent level, right? That level doesn't need to be amazing. Yeah, it just needs to be pretty good, right? So that you can potentially expect some sort of reaction when price hits it. Yeah, there's a few things, right? Obviously, when price comes down into an order block, yeah, you're expecting a bounce, right? You don't know whether it's going to bounce, so you don't go putting a fucking limit order in to buy it there. You just wait and see what price action does. If it breaks through, then you're looking for a retest of the underside and then a continuation lower, right? Because once a block is broken, it turns into a breaker. Yeah. So when a block is broken, so if you've got this block here, for example, once price breaks above that, my expectation is that we're going to come down, bounce, and then go higher and try and take out that high. That would be what I'd be looking for. Yeah. So when price comes here over here real later on, we tag it, we reject, which is what you're expecting. But then once we break above it, you're then looking for continuation to the upside. You're not looking for price to then come back down and go down again. Sometimes it happens like where we're here. Yeah. So when we break through, so we've got a block here, we break it. Yeah. We then come back up and retest. We then come down. But because we fail to get back down to this level, we then pull back up. And because we then fail to break back above and then go higher, we then retrace back down. We take out all the lows that are intact where there's stops lying. Then we hit the other block, right? It's quite self-fucking-explanatory. But the main thing that you need to understand is what makes an order block decent is if it acts as a decent level of S&R in the past. So you can go back and look and say to yourself, right, is this actually any good? Yeah, so those levels that I've just marked up further ahead, are they any good? I would say they're decent. It's not perfect, don't get me wrong, but you're never going to have like pinpoint reactions, right? And if you have, you're being too fucking picky. The whole idea of trading is fucking getting in, getting out, and making as much money as you can within that kind of period. Yeah, you don't need to be right all the time. You're not going to be right all the fucking time. You need to accept that. But the important thing is, like, if you learn how to mark up levels, yeah, just literally marking up basic levels. And there's people who mark up levels using ranges. There's people who mark up levels using blocks. There's people who mark up levels using all sorts of shit, right? Channels, wedges. Like I said to you, you can trade however the fuck you want, right? But you need to find a way that works for you. Yeah, you can scroll further forward in time and see that, you know, although we've drew those based on what was happening, you know, over here, yeah, all the shit that was happening over there, it's still, you know, reaction. Yeah, you're still getting a reaction in the market at those prices. Yeah, so we are reacting off the price. We're not reacting off anything other than that. So, like, again, when you see here, price, price, price. Like, yes, we dip quite deep in on some of these, but you wouldn't be pulling the trigger straight away. And framing the kind of like daily view on where price is potentially going, I mean, fuck me, we're miles away. But framing the daily view on where price is potentially going isn't actually that important, right? If you trade how I trade. Yeah, so based on how I trade, the easiest thing to do, if I go into my downloads, so I've got like a little document that I typed up, which is kind of like the typical life of a trader, right? So this is trading how I trade, right? I'll go through it very, very briefly. So obviously, like, routine is a huge part of your training, right? But the one thing that a mentor can't give you, yeah, and one thing a mentor can't give anyone is time. I personally believe that a lot of people would be a lot better at trading if they had the fucking time to put in to actually learn to trade at the right time. Yeah, there's no point in learning to trade at fucking 8 o'clock at night when the market's not moving. Yeah, it's okay to do some back testing and some fucking hindsight shit. But the reality is, when it comes to actually executing a trade and being in the market, you need to know what it feels like to be in an X amount of size at the time where the market is actually moving. Because you can go and back test a theory, and even if the strike rate's really good and you're like one of these, statistical guys who love stats, and you're like, well, if I know I'm going to be right 60% of the time, I'll just take every fucking trade I see, and no matter what, I'll make money. Whereas then when you actually come to do that and put that into practice, the psychology side of things and the psychological effect that it has on you, you will literally do your ass, right? And it has a massive input and a massive impact on how you trade. Consistency is way more important than getting 6 hour a trade. If you're shooting for like 6 or 7 hour a trade and you're not trading crypto, if you're trading in Forex and you're looking for like 7 or 8 hour a trade, you are literally pissing in the fucking wind. I will tell you that now. Yeah, because it will not work long term. It won't work long term. The most important thing to do is get a strike rate where you can make 1 to 2R or 2 to 3R. Don't go any higher than that. Sometimes you'll get a runner and you'll get 4 or 5R in a trade, right? Sometimes that will fucking happen, right? I'm not going to sit here and tell you guys that that won't happen, because sometimes it will. Sometimes you'll take a really good fucking trade, yeah? And you'll make solid fucking money. But more often than not, you're only looking for 2R. Most of the trades I take, I look for 2 to 3R. Sometimes I'll get a runner and make 4R, and then other times I won't, right? So let me just have a look at this shit quick. Wait, I think I've got a couple of examples on here, and then I'll go through some charts recently. I've got some that are marked up already. So if you look here, yeah, so this is a little example, a small example, yeah. So the buy position happens there, the stop is there, that's 3R, yeah, and that's 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes. Yeah, so it's 3R. So it's a basic break setup, right? But it's basically the bread and butter of what I do. Yeah, so every single trade I take will look very, very similar. Yeah, there are other ways that I trade. I don't just trade one way. I trade multiple ways. But the really important thing is that you don't go looking for silly fucking R. You will make good money, right? Like I had a guy in the room who made fucking 25K in a day. Yeah, he was risking £1,000 a trade. But that was big, right? That's way more money than what I make a week. Like I don't make huge money, right? I risk £750 per trade. So in terms of my risk management, don't know if have I got it? Yeah, I have. Right. Okay. I can go through that in a minute. But I don't make huge money, right? I don't claim to make huge money either. I'm just very consistent. So I make money pretty much every week. There are weeks sometimes where I don't do that well, but most weeks I make decent money. Well, what I class as decent is way more than what I would make in a normal job, because I don't have the intelligence to get a job where you earn 6 figures a year. I'll happily admit that. But I'm good at managing my money where I can earn 6 figures a year through trading. So that's what I do instead. But anyway, like I said, there's one thing that a mentor can't give you, right? And that's time. It's so crucial that you understand that you will only become really, 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 really good at trading if you dedicate the time to it. That is the most fucking important thing. The other most important thing is you're against yourself. You're not against the market, you're against yourself. The market doesn't give a fuck about you, okay? Doesn't give a shit about your strategy, doesn't give a shit about how you trade. Yeah, it doesn't even fucking know who you are. And that applies to fucking everyone. Okay, that even applies to these guys who work for fucking hedge funds. Doesn't give a shit about them. Right? The market's going to move up and down whether the hedge fund are fucking trading loads or not. Right? That market will fucking move up and down regardless. Yeah. So don't think to yourself that because all of a sudden you've got some Billy Big Bollocks 5 million account that you can start moving the market, because you've got fucking no chance. Right? So literally, you just need to get around that and get that out of your head. Stop thinking that you can move the market. Yeah. On really little shitty shit coins on crypto, big followings can sometimes move the market a little bit. Yeah. Or start the pump going and then all the hype goes around. Crypto is basically just social media marketing where they just pump up a shit coin, make a load of money out of it, and then pull some money out. Don't get me wrong. I do think there is some value in crypto. I'm not going to sit here and say I'm some anti-crypto guy. If you go back 4 years, I really was. I said I'd never go fucking near it. But in the end, I did. You have to adapt. As a trader, if you see an opportunity to make some easy money, you adapt, right? And I probably will start trading crypto in the new year a bit more. But I wanted to make sure that I made a certain amount of money in Forex before I moved over to crypto. And I hit that goal a few weeks ago. So because I've done that, I'm happy that, it's taken me 7 years. It's taken me a really fucking long time compared to how long it would take some other people. But, I've done it and not a lot of people have. So, I'm happy with that. And, we move on. Yeah. So in terms of my trading day, right. So this says I get up at 6:15. I get up at about 6:45 now. I managed to wangle an extra half an hour in bed. And the first thing I do is obviously arrive for the workplace, get ready for the day, check any positions you held through the night. Now, I don't usually hold positions through the night. I don't swing trade. I spread bet, and I'm basically doing low time frame trades, right? I'm in the market for about, the most I'm in the market for a day is 2 hours tops. And I'm rarely in it for that long. It's usually about 35, 40 minutes. And I'll go through some setups and you'll kind of understand and get the gist of why I'm only in the market for a short amount of time, because I don't look for a lot. I only look for 2R most of the time, and my stops are anything between 10 and 15 pips. So I'm only looking for 20 to 30 pips a day, which isn't a huge amount, but it equates to about 5K a week, 20 grand a month, a couple of 100,000 a year if you do really well. So it adds up, right? But anyway, in terms of like review, what you'd do, you'd review what happens during the Asia session. Yeah, so that's quite important. I look at what happens in the Asia session, work out whether there's any key levels that have been tested during Asia, and then work out whether price wants to try and challenge those levels again before reversing, or whether price wants to like break those levels, retest them, and then continue higher. There's multiple things that can happen. Right. 7 till 10:30 a.m. This is all UK time, by the way. So it's like 7 in the morning till 10:30 a.m. So that would be, in America, that would be like 2 a.m. until, I don't fucking know, 2 a.m. until like 8 o'clock in the morning, American time. But realistically, if you're based in the States, trading London Open is kind of rough. But if you're based in the UK, then trading London Open is fine. If you're in Australia, London Open's actually really good. I've had a few Aussie clients, and they love it because they trade in the afternoon when they're wide awake. Personally, I wouldn't like that. I think it would be too, I think I'd want to wind down for the day, and I don't think my focus would be quite there. But that's what they like, and it's up to them. At least they've got the opportunity to trade it, not at a silly hour. I feel like if you're based in America, you only can trade London Open if you stay up all night, or if you go to sleep, sort of like 4 o'clock or 7 o'clock American time, and then get up really early and start your day super early. So I do think for the people in the States, they get a bit of a rough ride when it comes to London Open. That's where I make the majority of my money. If I don't make money during this session, I will come back for this one. If I make money here, I don't even bother really trading that one. So I don't trade that often. I probably execute 20 trades a week, max, and I probably pull about 8 of those trades, 7 or 8 of those trades. So I'll probably pull them. So I'll execute them. They'll go like 8 or 9 pips on side. Then they'll come back towards my entry, and I'll just take like 2 or 3 pips because I don't want to take a loss. Because usually if I don't catch the move, it usually means it's going to reverse and stop me out. So I'm very aware of that. So instead of letting it fully stop me out, I either let it go to break even and just let it break even me, or I will take like 4 pips, right? And by taking those 3 or 4 pips that I sometimes take on the trades, that makes me like an extra grand a week just by cutting trades, basically. So through cutting trades, I make about £1 a week because I trade at roughly £75 a point, which is about 8 or 9 lots, depending on what pair you're trading. But I don't trade using lot sizes. I trade using a spread bet broker. So I trade through CMC Markets. They're my main broker. In the UK, they're really, really good. If none of you have an account with them, they are a good broker. Now, I don't normally recommend brokers. I use IC Markets to look at the charts and do like my technicals. And if I'm making like a mess around account or I just want to trade an account, I'll use them. But most of the time, I do use CMC. They're a really, really good broker. With CMC, yes. Yeah, so I have access to high leverage with CMC, spread betting. So that's kind of nice. I get 500 to 1 leverage with CMC, which is good, obviously. But again, you don't need, even if you don't have that, you don't actually need that. Like, obviously, to trade at £75 a point, you would need, I think, roughly, it's about 4 grand per £10 per point. So if you're trading at 75, you'd need an account with over 32,000 in, which is quite big for an FX account. So if you were restricted by ESMA, you would need, realistically, you'd probably need about 40k account, 45k account. So you'd need a pretty big account. Whereas I don't need that. So every £10 a pip I go in at, I only need about £400 worth of margin. So it's kind of chilling. Like, you don't need to leave a lot of money with the broker, like, ever. So you only need probably about 10 grand max. What I tend to do is leave 25k in, get it up to 50, withdraw 25k, get it up to 50, withdraw 25k. That's how I do things personally. But I have, like I said, I've got a professional account, so it's a bit different. Whereas if I didn't have that, I would have to have more money in it. But again, you know, I think a really good thing now for a lot of people who are trying to get profitable, all these little prop firms that are setting up, I think I have a mixed view on it, because I do think it's a good thing, but I also think it's a bad thing, because I know how much money they're making off people who think that the reason why they can't trade is because they don't have enough capital. And it's never that. If you can't trade, you can't trade. Whether you have fucking capital or not is irrelevant. If you're not consistent enough to trade with a £500 account and consistently make money, how is that going to change if you've got a 50 grand account? It makes no fucking, it makes a bit of difference, right? But in my opinion, if you could trade any fucking size account. It doesn't fucking matter, because your trade idea and your approach to trading should always remain the same, right? You should still have that same kind of approach. So it's a bit of a weird one. I think it's really good for people who are trying to get into trading, to have that opportunity where they can get a funded account. I think a big part of the problem is people are like, oh, I've got a challenge account. And just the thought of a challenge, that gets them, like, the psychological side again, it gets them. They're like, I've got to pass the challenge. I've got to make 8% or 10% or whatever company you go through. You know, they've all got these different targets. So they're all so hung on making this 10% or 8%, and they get carried away. And what they actually have, and what I thought was really good when I looked at it, the amount they let you risk per day is actually insane. Like, it's a lot of money that they let you risk per day. Like, I risk £1,500 a day. These little 70 grand accounts let you risk 3.5 grand a day. That's fucking huge. Your daily limit that you can risk is massive on these accounts. And you don't need to risk that much at all to make good money. Like, I risk 750 quid a day. Well, I risk 1,500 if my first trade goes to shit. Then my next trade, obviously, I risk another 750. But as long as my first trade does okay, usually I'm either playing with the profit from that, or I just take the one trade and walk off. And it'll all kind of make sense in a minute when I go through it. But again, you know, back to this, like I said, this is where you want to be looking for your sort of like trades, right? This is where you get the volatility. So between 7 and 10:30 in the morning, so an hour before London Open and 10:30 in the morning, you can squeeze that to 11 o'clock if you want. But most mornings, usually I'm done most mornings by about 9:30, 10 o'clock. Again, this is all UK time. So this is downtime for me. So 10:30 to 1 o'clock, or 11 until 1 o'clock. I do a daily session at 12 o'clock every single day with my clients, where I review what happened in the morning. We go over any trades that people took or what I took, sort of just go through the market and then see what's potentially setting up for the New York session. And then obviously then, boom, the New York session sets up. Then you've got the indices that start setting up and moving again in the afternoon. So that's kind of like my main structure of my day. So it's kind of like indices around here, any other Forex moves around here. Yeah. What you need to remember as well is at 1:30, you get a lot of fundamentals. Yeah. Now, in terms of fundamentals, I don't really look at fundamentals a lot. Yeah. So in terms of fundamentals, the way that I approach fundamentals is literally, I go on here and I don't even know if this is a good website. I couldn't give a shit about fundamentals because I don't stay in the market for long enough for it to matter. That's the honest truth. Like, I'm not in the market for long enough for it to matter. All I'm looking for is a burst of volatility, right? So in terms of my trades and stuff, I'll be like, right, this week, what we got on this week? I'll get the filter. I'll go down, get rid of all this shit. Don't care about that. I only care about high impact news because I want to know what's going to move the market, right? So I'm like, right, on Friday, there's some shit going on, right? This is probably the worst week to do it. Let's go next week. So I'd look at this and I'll be like, right, so potentially Tuesday, I need to be aware at 7 o'clock in the morning that Euro GBP could have some funky movement, right? 3 o'clock, we got PMI. by 3 o'clock, I'm usually done anyway, so it doesn't really matter. Wednesday in the afternoon, just before everything's going on. We've also got FOMC, which means the dollar could be slow in the morning on Wednesday. So don't expect too much from dollar pairs on Wednesday morning. And then Thursday during Asia, Aussie dollar is going to have some movement. So that means when I wake up in the morning, I need to check the Aussie pairs to see how much they've moved, because there's a high chance that they've already ran ATR. So there's no point in going fucking near them that day, right? And then obviously, that's just how I assess it. I don't care what it is. I genuinely don't care. All I care about is the time that it's happening and the potential impact it can have, right? Obviously, the first week of the month is always NFP. So next week, we've got NFP, right? On an NFP week, usually on an NFP week, I will be looking for really aggressive dollar moves on the Monday. So usually on NFP weeks, I don't actually trade the NFP, the actual result or whatever. I don't trade fundamentals. You're basically just flipping a fucking coin, trading fundamentals. A while back, I used to trade them. I used to trade dollar CAD every single non-farm payroll, and I used to hedge. So I used to put in a position just before the news came out. I'd put in a position with a 20 pip stop both ways with an 80 pip take profit. So it'd make me 3R, but I'd get stopped out once, so I'd make net 2R, something like that anyway. I back tested it with like 2 years worth of data. This was back in like 2016. And net, it would make me money every year. But I did it one day and I got fucking double stopped out. I got absolutely shafted, and then I just stopped. I was like, well, I can't afford to do that. Even though the stats told me that I would make money by doing it, the psychological impact it had of taking a double stop both ways, it just pissed me off. So I just stopped doing it. I just nipped it in the bud. I was like, I can't do that anymore. And I did the same thing with gold as well. And as you guys know, gold is a wiki fucker. But anyway, in terms of like identifying support and resistance, like I said earlier when we went back here, in terms of how I do it, yeah, I use blocks, right? They help me identify S&R. But the main thing I do, I use these levels to trade off potentially if price reacts off them. Let's get rid of that and let's go over here. So something else I just want to touch on. Obviously, that Word document that we just had up, it had a breakdown of days, right? Let me just get rid of that and get rid of that. So this is the DAX, right? So the black line on my chart is a key daily level. Yeah, so it's one of those levels that I just showed you a minute ago. So it's like a block or something like that where it's a good level of S&R, right? So on the DAX, you've got a block there where it's a good level of S&R somewhere on my chart on a daily chart. Yeah, so if I go to a daily chart, let's get rid of that as well. Why won't that fucking go? There we go. Right, got rid of it. Right, so if you look at a daily chart, right, where we had those levels, yeah, it will be a block or something. So you got the block there. Yeah, so if I just draw it out for you just quickly, just so you can see where I'm sort of getting these levels from to work with. So I've got a level there. Then I've got a level there as well, which is this massive one here. Yeah, I won't bother drawing the candle all the way, drawing the box all the way across because there's no fucking point, right? So you got one there, right? You've also got another potential level here in the middle. You've also got another potential level there, but the next one above market is there. I tend to keep a little bit of a gap between them because I never want them to be too close, because you could just have so many levels otherwise and it just doesn't make sense, right? So, you know, a big part about how I trade is very, very simplistic. And what you'll find is, like, if you look at the market, so that's a high, that's a low, yeah, that's a key daily level, and then I buy the break that takes me up, right? And in terms of like the pattern, like it literally repeats itself 2 days in a row. This is the price action over the last 2 days, right? Price has dipped down, Asia lows taken, into my key level, broke above my key level, I get long. Yeah, and my stop just there. So I'm long in here, stops there. I'm only looking for 2R, so I'm done by there. Yes, I know it carries on going up and I've lost out on loads of money, but it don't matter. Like 2R for me is enough, right? Again, another example of it here. Price has come down, broken the Asia low, yeah, hit my key level, come back up, broken through my key level, I get long. It's really straightforward, right? And I just rinse and repeat that. But I also have like other ways that I can trade as well. So when the break fails, yeah, so again, Asia high taken into a key level, but the break has failed. We failed to break through and go lower, which means we should reverse and take out the high we made earlier. So in this trade, literally, if I see the bounce here, I will look for a long just to take out this high. So my target's tiny, right? Like I said to you, I don't look for massive targets. I'm looking for a long position here, stop below this low, and my target is literally there. So I'm not looking for a huge amount, right? But it is enough, right? It's 2R. And it sounds crazy because it's only like a small amount, right? It's a tiny, tiny amount in terms of price action. If you look here, this is where I'd pull a trade. You know, I said to you guys that I take trades and then pull them and then I get in again. This is a really good example of that, because if Asia low taken into my key level, I buy the break. Yeah, price comes up. Yeah, so I execute my trade. So in terms of the execution, I'm executing here. Stops below here, so I've got a 185 point stop or whatever. Yeah, we rally up 390, which is 2R. So in theory, my stops are already at break even. As soon as I go 1R up, my stops go to break even, because I fucking hate losing money, right? The amount of times I get stopped out for break even is quite a lot, but I don't care because I know that net I'm going to make money, right? So anyway, stop goes to break even, price rallies up. Then when it starts coming down, I'm like, I don't like the look of this anymore. I'm just going to collapse it. So I'd collapse it anywhere. Once this candle starts coming down and gets below the Asia low, because that's where I'm expecting it to bounce from. I want to see a bounce off that level, like what we get here, yeah? So I'm looking for that here. I'm looking for that bounce and higher. If it doesn't bounce here, I know that my next level where I could potentially get a bounce is there. So what I do once we get below that, I collapse my trade. So I have a little bit of profit there. Then when I see it bounce and start moving away, I get in again with a slightly worse fill. Yeah, so my fill's slightly worse. So I'll be getting in like here, stop below there, stop in the exact same place. But because I've got a slightly worse fill, I know that, you know, we're trying to make the next leg up. And as long as we make that next leg up, I've usually made my 2R and walked off. Right? So when you add up the money I've made from this shitty position that went to shit, and then the money I've made from this position that actually paid me pretty decently, yeah, that's my 2R. And then I walk away for the day, right? Sometimes I'll sit in that and hold it, let it bounce, and then let it go. It depends on what the market conditions are. It depends what the dollar index is doing. It depends what Euro GBP is doing. There's a lot of things that come into, it's not just a simple fact of mechanically looking at it and being like, right, that's happened, now I get long. There are a lot more things that come to it. So in terms of like looking at Euro GBP and looking at the dollar index in terms of like, you know, where's the dollar going? What does it want to do? I trade quite a lot of markets as well, as you've probably seen. But like in terms of like what I want to look for, yeah, what's really, really important is that, you know, obviously if the dollar goes down, then you're looking for other foreign currencies to go up. If the dollar goes up, you're looking for other foreign currencies to go down, right? So that's quite straightforward. Now, with the dollar index, it really is one of those things that if you follow it well, it can make you tons of money. But if you don't know how to follow it, then you're just pissing in the wind, right? So again, with the dollar, if I see the dollar aggressively rallying for the day, that means I can potentially look for what? It means I can look for cable shorts and euro shorts. Yeah. So if I've got a really, really bullish dollar, so let's find a day where dollar was bullish. I don't know whether I'm gonna be able to find one. Not quickly anyway. That's fine. Fuck it. We don't need a bullish dollar day. We can have a bearish dollar day. Right. Anyway, we'll go over to Euro GBP because Euro GBP is like my guide. So the main pairs I trade, believe it or not, Pound Swiss is one of the main pairs I trade. It's one of the main pairs I make money on. So Pound Swiss and Euro GBP are pretty much inverse. Yeah, so they're basically inversely correlated. And it's not all the time. Sometimes they'll be out of sync. So if you look at yesterday, for example, Pound Swiss looks like this. Euro GBP looks like that. So it's kind of inverse. It's not perfect, but it's kind of inverse. Some days it's absolutely perfect, right? I need to cough. Give me 2 seconds. On days where it's perfect, trading's very simple. Yeah. On days where it's not so perfect, trading's a bit more difficult. So if you go over to this day here, 21st of December, if we go over to the 21st of December here, you're looking for the inverse of what you see on Euro GBP. Now you don't get that. Yeah, it's kind of close. Now if we zoom in, yeah. So if you look at Euro GBP, Asia high has been taken. Yeah, let me just, I'll make this a bit more visible for you guys. Wait a sec. This one. Number of days to show. Hundreds? No, that's one. It'll be a bit more visible now. Right, here you go. So, right, a really key part of what I do is the Asia high and low being taken. Now, this isn't the proper Asia session. I end my Asia session at 5 o'clock in the morning UK time, because 5 o'clock in the UK time is midnight in New York, and the Forex market basically moves with the dollar, right? The dollar controls a lot of what happens in the Forex market. As far as I'm concerned, the dollar is the strongest, and if the dollar goes up, you don't go against it. If the dollar goes down, again, you go against it. If you've got a weak dollar, you go against that weak dollar. If you've got a strong dollar, you go with it. You can go against it and you can still make money, right? You know, I could be really, really bullish dollar, but I might make money short in the dollar because a trade might set up where you just get a bounce, right? And all I'm looking for is that tiny bit. I'm not looking for a huge amount. You know, in terms of stop loss placement, I'm only usually running like a 10% ATR stop. So if the ATR is 70 pips, my stop loss in theory will only be 7 pips. Now, 7 pips is very tight. So I usually up that to 10 because I want to risk £750 per trade. So I'll go in at 10, I'll go in for a 10 pip stop. I'll trade at £75 a pip. If I go 18 pips on side, I've made nearly 1,500 quid. I'll take that money and I'll walk away. I'll try and do that 3 to 5 days a week. And if I do that, I make 5 to 7 grand a week. If I don't do that, I make 2 to 3 grand a week, just cutting trades and getting one good one. You know, if I get stopped out, I tend to take the next trade at half size just to get my money back and get flat for the day. A lot of it is about risk management. And I find that risk management is really, really important. And unless you really, really get to grips with it and understand it properly, you will do your ass. You know, a lot of people say, "I'll risk 2% of your account" and all this kind of stuff, but I disagree with that, and I'll go into why in a minute. But in terms of Euro GBP, like in this example here, yeah, prices swept the Asia low, swept the Asia high. Both sides of the market have been swept, right? If you look at what's actually happened, we've tried to take out the previous day's high and failed. Yeah. So once price starts aggressively shitting here, I know that I should be looking for bullish pound setups because when Euro GBP goes down, it means that sterling should be strong. Yeah. So if Euro GBP is about to aggressively shit, I should be looking for longs on pound Swiss. Yeah. So this is where I know I should be looking for longs down here, 5 to 8. Yeah. So if you look at the time on the broker there, 5 to 8, it starts going down. If I look here, 5 to 8 is down here. So I know I should be looking for longs here, right? But I don't buy here. I wait until price breaks above my key level. Then I execute my long and I put my stop below that low, right? So that would be quite a wide stop for me, 20 pips. That's really wide for me, in fact. You know, I'd probably have it a bit tighter. I'd probably even have it there, and I might have got stopped out the spread, in fairness. But again, price rallies up and it goes at least 1 hour on side, and then it starts struggling. Yeah. So I would either pull it, take a slight hit, take a small loss, and I'd wait. And I'd wait until it gives me the opportunity to get in again and get all my money back and some. Right. And sometimes I will have to crack this like 2 or 3 times before I actually get the proper trade off. But I will sit there and wait until I do it. Some days I'll sit there all fucking day and not get a trade because I've been stuck trying to trade the same pair and it just doesn't fucking budge. Right. Some days that happens. Yeah. But on this example here, where Euro GBP then breaks through, comes up, retests, starts going down, that point there is where you're thinking, right, pound is definitely bullish. Yeah. But then it comes up again once more, right? So those 2 tests there could be something that would force me out of that trade, right? And they're where you get these 2 bounces here. So you get a bounce there, then we eventually go, right? Now, I was in this trade. Yeah, I was in this trade last week. And I pulled this trade on this red candle. And I was fucking fuming, right? Because I'd been there for so long, right? I'd cracked it, gone on side, cracked it again, gone on side. I was like, for fuck's sake, it's just not budging. And then I saw Euro GBP start coming down here, and I was like, oh, it's going to go. And then I pulled it. Because Euro GBP went here. Yeah, so if you look at the time, goes back to the time, what I was saying earlier, yeah? 11 o'clock, which is 9 a.m. UK time. That's when pound went bullish, yeah? So at 9 a.m. UK time, 11 o'clock on the broker, here, pound went bullish. So I'm like, right, pound's going to fucking go now. And I sat in it for another sort of like 50 minutes. And I was like, for fuck's sake, this just ain't going. Yeah. And if you look at where Euro GBP is at 11.50, it's down here. Yeah. So I'm expecting this to absolutely fly, but it just hasn't. So because it wasn't moving, I was like, fuck it, I'm just going to get out. Because I've been fucking around with it so much that I just got fed up. I do not like being in a sideways market. If I sit in a market that's sideways like this, it usually comes down and fucks me. Right? So what I'm looking for that burst of volatility. And that's how I trade. Right? I'm all about a quick burst of volatility that takes us somewhere that gets me paid. Yeah, I couldn't give a shit about whether it's up or down. I don't give a fuck about what way the market goes. I genuinely don't care. So like this example here, Yeah. You need Asia high or low to go. Asia high's gone. So then I'm selling there. Right. And what I'm looking for that volatility that takes me to the downside. Yeah. So that volatility there, again, 10% ATR stop. So our ATR is 127 pips. So my stop loss has to be at least 12 pips. Yeah. So a 12 pip stop, does it make sense? Yeah. 12 pips is just pretty much above this block anyway, once you allocate spread. Yeah. So 12 pips is fine. Yeah. I'd take that trade. 12 pip stop. We go down 21 pips. I'm taking profit there. Or I'm taking 18 out of it. I'm taking 1.5R. I don't give a fuck. Right. Because that's the quickest 1.5R you're going to make. It's like 10 minutes work. 5, 10 minutes work, and you make $1,000. You can't do that in any other job. You cannot do that in any other job. And, you know, the market will always be here. Yeah, it's not doing anything it's not going to disappear. And again, another example here, Asia high taken here. We then have a retest there where we fail to take the high. So if you took the long there to try and take out the high, you'd then collapse it when it comes down. Yeah, but you'd take the break here. You'd look for the sell position. You might collapse it because it sits there for so fucking long before it goes, but eventually it does go where you wanted it to go. You could also buy off the key daily level to the upside. There's multiple ways that I trade, right? But the important thing to understand is the time of day is like really crucial. And if you look at the DAX over the last couple of days, it's been a really good example of why I trade how I do, right? So, you know, I said to you guys on that time of day thing that I trade between 9 o'clock, 7 o'clock UK time, and 10:30. Yeah. So those hours are there. Right. So that's where I trade. This is where I look for trades. This pocket of price action. Yeah. Asia high, gone, long, money. Yeah. So you make money there. Yeah. Again, previous day. This is where I'd be looking for trades between 9 o'clock. And again, this is all situational, right? And it's all based on how you trade as a trader. And, you know, yes, price does eventually go higher, right? But I don't want to sit there in the market all fucking day. You know, the whole reason why a lot of people start to trade is because they want, well, I don't know what some of them want, but they all bang on about financial freedom and all this fucking bollocks and, oh, I want to have more time and stuff like that. But then they'll sit there for fucking 14 hours a day staring at the screen. It's like, what fucking planet are you living on? And you get people that moan about it. They moan that they have to sit there all day. Well, if you have to sit there all day, then there's clearly something wrong with the strategy that you're using or how you want to trade, right? Because if you started trading thinking, yeah, I'm going to be financially free and then, you know, I'm going to be fine, but then you're sat there 13, 14 hours a day staring at the market and then ending the day flat, they're really frustrating days. And I've sat there and done that. Right, I'm not going to sit here and say that I haven't done that because there have been times in the past where I have done that. You know, like this example here, I wouldn't get a trade in the morning, right? So I wouldn't get a trade here. Maybe a rounded retest, short, but realistically, the trade on this particular day actually happens in the second part of the day where I look for trades. Yeah, so the trade happens between 1:30 and 6 o'clock at night or 5 o'clock at night. So that's where the trade happens. Yeah. So I trade in this section here and this section here. This is downtime for me. Yeah. And the reason why this is downtime for me is because usually it's a quiet point in the market. If the market hasn't done what I want it to do in this session, then it will usually do it there. Right. But if it's done it in this session, so this session it didn't do it. But then if you mark up where it did actually do it, again, go to the time, go back to that 1500, 3 o'clock, 1 o'clock UK time. And then go to sort of like 8 o'clock, 7 o'clock there on the broker. So 5 o'clock. That's the portion, right? Now you can move that to 1:30 because that's pretty much where I'd look for execution, right? So again, that's downtime. Didn't really get much there. In the downtime, nothing really happened, but then we got a really good bounce off a key level and aggressively moved away, right? And you can look at this across multiple pairs, across multiple assets. And what you will find is this portion here, where I don't trade, is usually shit, right? Now, it's not every single day. You know, some days the market does absolutely fly and I miss moves, right? You're never going to catch every single move in the market. You're just not, right? There's no point in thinking that you are. But the main thing that you need to understand is that to make money out of the market, you don't need to sit there all day. You will probably make less money if you sit there all day. I've got a guy in my trade room. Where is he? Where's he gone? This chap here, yeah, he makes 27% less money if he trades after 10 a.m. He makes 27% less money if he trades after 10 o'clock in the morning. Now let that sink in. So he plays golf all the fucking time. That's what he does. He plays fucking golf all the time. I cannot spell today. He just plays golf like loads, right? So where's he? I think he's in one of my things here somewhere. Here you go. This is him, right? So he came and learnt from me. He was making 500 to $1,000 a week, yeah, and now he's making $4,000 a week, and he trades less. He trades fucking less, and he's making like 4 times the amount of money just by trading less. Like, sometimes less is more. Like, and people get so carried away with the fact that you need to trade all the time. You really fucking don't. Like, you really, 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 really don't. You just need to wait for the right trade. And you can set alarms. This is the thing, right? You can literally just get an alarm. And your alarm goes off when your level is crossed, right? So you can put an alarm at the levels where you want to do business. And even if you're not on that chart, let me put that there and then move over here. It even fucking tells you what pair it is, where the alarm's got. You just literally go over, you delete your alarm, you wait a few minutes to see if it's going to give you the price action that you want to execute your trade, and then you get in. And if you make money, great. If you don't make money, just go next. Like, you're not going to make money every trade. You're definitely not going to make money every trade. And I think, like, you know, one of the most important things is being able to read the market and being able to map it. Yeah, and people find it really, really difficult to map the market. Yeah. One thing I will say to you guys, you know, if you want to map a market, and you can pick any market you want, right? And what's really, really important is, even if you pick like a shitty market, what's this? Well, this is really shitty. If you pick a shitty market, this is a bad one. Yeah, you can't really use that one. But if you find a market that's a bit shitty, but there's opportunity there, yeah, you can map this so easily. Yeah, if you know what a block is, you can easily map this market. Whenever you see wicks on candles, say to yourself, right, that's probably a good level of S&R. Just put a fucking line through it. Does it look like a good level of S&R when you see all of those fucking wicks? Yes, it does. Whether there's a block there or not is fucking irrelevant, right? You've got a really good reaction in price off those levels, yeah? But where else is there also a really, really good reaction in price? Off the block and the middle of it, right? So if that was me marking up that level, I'd be using it there, right? Because that is closer to kind of how I trade, right? But if you're just looking for basics, again, there's another block there. Another block there. You've got a breaker there. You've got a block turn breaker there. You've got a block turn breaker there. And then all of a sudden, if you look to the left, you've got a mapped out market. Now, it's not perfect, and it doesn't need to be perfect. And this is what you guys need to understand. It doesn't need to be perfect for you to be able to execute trades off these levels. Because you should use them as magnets, and you should use them that price is going from A to B, or B to C, or A to B to A again, right? It doesn't really matter how it gets there. What matters is that it gets there and then rejects down, or gets there and then retests and goes higher. Yeah, once you've got those levels mapped out, you can really work with them and use them to your advantage. But only map them out on a daily chart. Fuck the rest. There's no point. The only time where I'd use a lower time frame chart to mark out intraday S&R is during the day, right? So when I come to a chart in the morning, I'll be like, right, I'll look at something like this. So something like this morning, right? I'll be like, so I'll be getting up like here. Yeah. I'll be like, right, what's happened? Right. I'll be like, well, this is really fucking dodgy on the open. So it's obviously shit liquidity from the liquidity provider, but the weekly open's there. So the yellow line's the weekly open. So the weekly open's really, really near. I'll be like, right, my range has opened above the Asia range already. Don't really like the look of that. If we break above this level, I potentially look for longs as long as the dollar is bearish. Yeah. So if the dollar's going down, I can potentially long Aussie dollar here, right? Once we break above, as long as it's after 8 o'clock, which it is easily. Yeah. So as long as the dollar's bearish, I can potentially take this trade. So then I then go to the dollar index and I say to myself, right, is the dollar bearish? Yes or no? And it's a simple checklist, right? Is the dollar looking bearish once we reject off the weekly open? Well, yeah, it is. I know it's eventually turned bullish, right? But for the period where I needed to get in, the dollar is bearish. It's below the daily open. It's below the midnight open. It's below the weekly open. The Asia high has been swept. The Asia low has been swept. And we are starting to head down, Yeah, so I see that and I say to myself, right, I could potentially look for longs on Aussie dollar if I want them here, right? 10% ATR stop on this is 6.5 pips. Is there a place 6.5 pips below market that makes sense for me to put my stop? It's okay. It's an intraday breaker, right? There's a breaker there, and I use these things to help me frame my stop loss. I don't think that they're anything important, right? They're just to help me frame levels of S&R. And if that level of S&R looks decent, and in this case it does, you know, it's already got a line through the middle of it anyway because it's the 5 a.m. high. Yeah, so it's already got a decent level of S&R there intraday. It's not perfect, right? And again, like I said, you shouldn't be looking for perfection anyway, because all you want to do is get in and get out of the market and make a small amount of money. You don't need to make a huge amount, right? You are literally looking for, if your ATR is 65 pips, yeah, and if during the Asia session we've already moved 15, yeah, you can only look for 50 pips because you've got 65, you've got a minus the 15, because if we hit ATR, you've only got 50 pips to look for. Yeah. Then by the time you're executing, it's up here. That is another 7 pips away. So really, you're taking 22 pips off that number. Yeah. So you're looking for 43 pips, the maximum. Yeah. You are looking for 43 pips maximum for 6 pip stop. Yeah. So your 6 pip stop's here, 43 pips maximum. We only go up 16, but that 16 is 2R. Just take it and walk off. Like the amount of times that you go 1 or 2R up in a trade and be able to just walk off comfortably, take your money and go, happens all the fucking time. It depends on how you trade, right? How many positions do you enter and they go at least 10 to 15 pips on side? For those of you who do trade Forex, you probably will enter quite a lot of positions and go 10 to 15 pips on side. I mark up Bitcoin on here, but I don't really care about Bitcoin, I'll be honest. But again, it's all support and resistance. Yeah, like everything I do, it's just support and resistance. Everything on a chart is just support and resistance. And I don't care who you are, it's just fucking how it is, right? And it's that simple. Yeah, even if you go to, let's get rid of that. Even if you go to, let me load up this. You can literally load up a chart and put one fucking line on it and make money out of it, right? Here you go. This one fucking line, right? This is one line. Go to a 15-minute chart. Get out of the Christmas period because the Christmas period's a bit shit. Here you go. Right. If you can only look for longs when price is above that line and only look for shorts when it's below it, using price action that is around that line, you would be able to make money if you traded at the right times of the day. And that's what's really, really important, right? 9. Been through this already. 9. So forget all the other shit. Just focus on the 9 until 1:30. Yeah, now that isn't a great example because it ends up going in the afternoon session instead. So you got 15:30 here until 7 o'clock, which is like there. So it's a bit of a slow day, right? And it's a very, very slow pair. Dollar Swiss doesn't move that much. So it's probably not the best of examples in terms of like to show you what I'm trying to explain. If you was to go to Pound Swiss is a good example of it. Wait a sec. Pound Swiss. Cable's also a good example. We'll use Pound Swiss because that's kind of my baby, right? So Pound Swiss, 5-minute chart. Literally, just going to whack one indicator on there. Yep, there's right. So if you're only looking for longs or only looking for shorts above or below that line, are you going to make money? Yeah. So if you're on this day here, if you're only looking for longs when we're above it, and you see it retest this level multiple times, surely you're going to crack it on one of those, right? You've got a block there as well to back it up. You've easily got a place where you can put your stop. The liquidity that was over here has been filled. Yeah, I know it's hindsight shit, but it fucking works, right? You can literally make money off a fucking line on your chart. Like, it's very, very, very simplistic to make money trading. You just have to take a simplistic approach, right? So don't go having all this fucking ninja shit to try and make money. Like, there's no point. There's no need for it, right? If you're only looking for shorts when we're below this line and only for looking for longs when we're above it, you'll look for longs for a bit, you'll do your ass, and then you'll short it and make all your money back and some. It's so simplistic, but people overcomplicate it. Like, they try and do stuff that there's no need to do. Like, that's what really gets me. Like, I see, like when I get new students, they come to me and they're like, yeah, I do this, I do that, I do this, I do that. I'm like, fucking hell. I'm like, what are you doing? Like, and this is another really good strategy. I've actually got a bot that I've sort of like been coding to basically it's called the double line bot, I think, or something. What's it called? Wait, let me see if I can find it. It's on C Trader. Wait. Wait for this shit to load. Yeah, it's called a double line bot, right? Now this bot, all it does is it will look for a long or a short when price is below or above those levels. Yeah. So that bot basically will look for longs and shorts. If we go to a 15-minute chart, let's go right fucking back. Yeah. To like here. Yeah. We'll start from here. Right. When price is above both these lines, it will only go for longs. When it's below both lines, it will look for shorts. Yeah, each day. There's a cut-off in terms of the time it will let it do it, but it'll only look for longs when it's above both lines. So once we aggressively break, it will buy it there, and it won't put in a sell position that day because we go into the next day. Yeah, it won't put in a long position here because it's not a but. It's too early in the morning if you look at the time of day. Yeah, so it has to be at a certain time of day as well, right? So both lines have to be physically visible on the chart. So the easiest way to look at that is to zoom in a bit, yeah? So it has to be from here. Yeah, so from that point there, once we get above both lines, it will look for a long. Once we're below both lines, it will look for a short. And if you look at this across the board, you can see how there's money to be made there, right? You can also see how some days it is really, really choppy and it will stop you out. But more often than not, you would be able to make money taking this approach, right? It's just about how you approach it, right? And the psychological side of things, right? So if you're only looking for longs from this line here when you're above both lines, yeah, or only looking for shorts when you're below both lines, you have a long opportunity there, you have a short opportunity there, you have a long potentially that would wick out, and then you'd be going short again. Now, if you took all of those positions, yeah, and again, it's hindsight shit, I'm fully aware, right? This position here is at 7:15 in the morning. We rally up 21 pips. Yeah. We then break, we go down 30 pips. We then break, we go up 7 pips, and it stops you out. Yeah, because you'd only have a 10% ATR stop, right? But then you'd execute a short position here with a 10% ATR stop, and you'd fucking clean up, right? And this happens a lot. So again, here, you'd execute a long position, 10% ATR stop, break even once you go above that 10% as well. So stops to break even as soon as it goes at least 10%, as soon as it goes your stop loss on side. Yeah. So if you're, what's our ATR on this? It's like 70s, right? Fuck's sake. ATR. I think our ATR is like 70 odd pips on dollar Swiss at the moment. 91. Okay. Christmas has made it better. So you'd have a 9 pip stop. Yeah, so let's just run off a 9 pip stop for now. So every single trade you take, 9 pip stop here. So our stop would be there. Break even once we go 9 on side. So it'd be break even here. And you'd hold it for as long as you want, really. And again, you'd execute a long position. Once you're 9 on side, you go break even. That would come back and stop you out for break even. But then it would, it wouldn't even long there because you're not above both lines. So you wouldn't even long there because the lines aren't close enough together for that to trigger the long. Your price needs to break above both for you to long it. So it wouldn't even take a long there. What it would do, it'd take another short position with a 10% stop. And again, it would make money. And here, again, long, 10% ATR stop. You'd get stopped out for break even, potentially. You'd then short it, again, stopped out for break even. But eventually, your long would make you money. And again, it's all about having patience in the market. Some days you will get absolutely chopped to shit with this approach, right? This day here, you get fucked. Right? Let's not beat around the bush. This day here, you'd get fucked. Yeah. But more often than not, you make money. As long as the market conditions aren't really choppy. Obviously, it's Christmas, so the market conditions are a bit shit anyway. But on the whole, and that's just a fucking line on your chart. Literally one fucking line. Right? And so trading is as simple as you make it. If you complicate things, you're going to do your ass. But if you keep it simple, it's very, very easy. right? So my bread and butter, everything I do, I wait for a break and then a break and then I'm buying. That's it. Yeah, so I want to see a break to the downside that takes out a key level or goes into a key level. Then I want to see a break above my key level. Yeah, you can clearly see that this is a really strong level of intraday S&R here. Yeah, you can clearly see that on the chart. It's a massive level. Yeah, you've also got the daily open there. So we're breaking above two massive levels, and then you execute here, stop below there, or 10% ATR, depending on how wide this is. So 11 pips on Pound Aussie. Pound Aussie's ATR is, again, big. Pound Aussie's ATR is usually about 130 pips. So in that situation that we were just looking at, which was this here, you would have at least a 13 pip stop. I would put it below the daily open there. I'd run a 16 pip stop. Yeah. But my target would be taking the Asia high. So I'd be looking for 32 pips, which is 2R. Yeah. Obviously, we get 28 pips on side. Is it then worth risking your 28 pips for fucking 4 pips? No. Stop being a cunt. Take the 28, walk away. If you get another opportunity to get in later, great. If not, don't worry about it. You've still made 28 pips. Yeah. And once you start slinging size, and this is what I'm getting into in a minute, the whole risk management bullshit that people talk about. Yeah. Once you start slinging size, 28 pip and £75 a pip ain't even size, right? £75 a pip is fuck all compared to what some people trade. Yeah. But that's still £2,100. Yeah. In 5, 10, 15, 20 minutes. So 20 minutes work. Yeah. So in 20 minutes work, you're making £2,100. Times that by 3, you're making £6,300 an hour. It's your hourly rate. You're not going to get paid that anyway, right? And yes, and people are always like, oh yeah, but you have to sit there and watch the market. That's bullshit. You don't even have to sit there and watch the market, right? Because you have this here. So you know you don't need to look for trades until here. You know that you need your Asia low to be taken. So you'd set an alarm there and you'd look. So when you wake up, you'd be like, right, Asia low's already been taken. So now all I would do is literally put an alarm just here, because I don't want to do business until we break above here. So set an alarm just there. When that alarm triggers, I'm like, right, now I just need to wait and see if we can break above. We can break above, I can execute my long position. Yeah. And then I just sit in it and I'm like, right, aggressively rallied, aggressively rallied, aggressively rallied. I want to see the Asia high taken, but what I'm currently seeing is rejection off the block at the top of the Asia session high. Yeah. Again, like I said, I use blocks, but I don't care whether they're fucking right or wrong. I care about whether they act as a level of intraday S&R. That's all I give a fuck about. I don't care about anything else on the block, right? I'll go back as far as looking further back and seeing if it works around here as well. And a lot of the time it does. And the reason why it does is because, to be honest, you can draw a fucking line wherever you want on a chart and it will be a level of S&R somewhere. And that's where technicals are just basically, it's just all a load of shit, right? It's just that psychological side it has on your head. But what you need to realize is you need to work out how you can get in and get out of the market making profit, right? You need, there's a few things you need to trade full time, right? You need trade frequency. Trade frequency is fucking huge, right? I was talking to someone the other day, and he's a good trader. He's definitely a fucking good trader, right? I know he's a good trader, but his trade frequency isn't that high. Yeah. So because his trade frequency isn't that high, he struggles sometimes to make money. And it's because he's not getting enough trades. Whereas what I do, I get trades every single day, fucking everywhere, right? I literally have a bot that tells me when a potential trade is coming. Yeah, so I have a bot within my Discord channel there. Yeah, that bot literally tells me when there's a potential trade. So it'll literally send me a message saying there's a potential trade to the upside on pound CAD. There's a potential trade to the downside on pound CAD based on my strategy. Yeah, so it'll literally be based on my strategy. It'll be like, right, Lee, there's a potential trade coming on this pair. So I can literally go to the pair, I can look at it, and I can say to myself, right, do I like the look of this, yes or no? If I like the look of it, I pull the trigger. If I don't like the look of it, I just sit and wait until the next one goes off. Right? But it's all about how you approach the market. And something that's really, really important is that you understand this, that the market repeats itself. These patterns happen all the fucking time. All the fucking time this kind of pattern happens, right? People say, oh, patterns don't happen in the market. That is bullshit, right? That is absolute bullshit. These kind of patterns happen all the fucking time. You've just got to work out how to identify one that can make you money, right? That is the most important thing. Yeah, if you look down here, I posted a tweet about it. What's this? Is this the DAX? No, this isn't even the DAX, but it's the same fucking pattern that I've just showed you. Prices come down, broken up, and rallied away. Happens all the fucking time. Like, I cannot emphasize enough how much this pattern happens. And it happens both sides of the market, both ways. If you get consistent at trading it, you will consistently make money. Where's that? There's one. Boom. That's a retest to the downside, so that's a bit different. Here you go. Boom. The opposite, where we come up, then go down. Here again, go up, then come down. It is so simplistic, and it just makes money. And like, you've even got like before and afters on here as well. Like before I had all my indicators and stuff made, I drew one out literally. So this is before it happened. This is me manually drawing it out because I didn't have indicators. This is fucking years ago. This is 247 weeks ago, right? I made 9R this day. I do not hold trades that long anymore because I sling a lot more size. So I don't need to hold trades that long. Oh, fuck. If you look, it's exactly what I wanted to see, right? So exactly what I was looking for, that dip down into that key level that I had marked out, and then the rally up. Like, it's so simplistic, but it just works, right? And it's been working for fucking years. Like, this shit just works, right? So if you find something that works for you, just rinse and repeat it over and over and over and over and over again. And eventually you will make enough money so you can trade for a living. It's literally that simple. Like, I don't quite understand why people try and overcomplicate it. There's really no need. Like, obviously this one here, prices come up, Asia high taken, retested there, gone higher, took out the high from earlier. I'm getting out up here. That's my trade done. Yeah, that's the trade right there. Right? But you can also sell the break there later on in the day with a stop loss like that and take it down. There are so many opportunities in the market every single day across multiple pairs, and people just don't snap them up. This is a really good trade example here. Yeah, again, prices come down, tagged a key level, broken above the daily open. I actually longed it here. Price then comes up. You get out there, stops are resting there. So fucking simple. It is so simplistic, but people don't understand that you just need a basic little strategy where you can fucking milk the market. And you just need to get used to doing it and doing it well. Right? And the only way that you do that is by giving yourself that time in the market. Right? You need to give yourself that time. Yeah? Now, I wanted to talk about risk management because it's a thing. And people don't really think it's a thing, right? Well, people do think it's a thing, but people are fucking stupid with it as well, right? So what this is, yeah, it's a really, really basic equity sheet, okay? So for starters, one thing I want to say is if you are a fan of compounding sheets and, you know, spreadsheets and all this kind of stuff, fine, be a fan. But I can tell you now, yeah, you are not going to compound your £1,000 into £1 million in 50 trades or 100 trades or whatever you want to fucking do. Yeah, it is nigh on impossible. Doesn't matter how fucking good you are at trading. So fucking give up with that shit, right? Because what I will also tell you right now is once you hit a decent amount of capital, by decent amount, I would say anything over 100 grand is enough to make serious money. When you've got 1 million, yeah, life's very different. Let's put it that way, right? Now, what I will say to you guys is I do not fucking risk 20 grand a trade. Yeah? People say that you're supposed to risk 2% of your account. That is the biggest load of bullshit ever. I'll tell you why that's the biggest load of bullshit ever. If I'm risking 20 grand through CMC markets, yeah, and I want to take a trade with a 10 pip stop, the most CMC will allow me to trade at is 1,400 and I think it's £56 a pip. They physically won't allow me to trade any higher than that. So how the fuck am I going to run a 10 pip stop and risk 20 grand? And more importantly, are you going to risk 20 grand on 10 fucking pips? Because if you are, you're a fucking lunatic. Right? I'll tell you that right now, because if you get slipped, you will get your absolute fucking ballsack handed to you. So that slippage that you saw where I lost 19 grand on one account, 6 grand on another account, lost 26 grand in total. Yeah. That slippage, I was trading at about £195 a point because I'd compounded into the position. I was trading at about £195 a point. So if trading at £195 a point, I lost 25 grand within like 5 or 6 seconds. Yeah. Could you imagine the fucking amount of money you would lose if you got slipped with a 10 pip stop trading at £1,400 a pip? You would get your absolute fucking arse handed to you. And I know that a lot of brokers have zero balance protection and all this kind of stuff now. But trust me, this shit don't fucking work, right? Now, what does work is being an absolute fucking pussy like me and risking 0.08% of your capital to make 20k a month. That's what does fucking work, right? So I don't make huge percentage gains. In terms of percentage gains on my overall capital, I don't make hardly anything, right? But the monetary value is fucking huge, right? So I know, on average, I take about 5 decent trades a week, yeah? So to do 50 trades will take me 10 weeks. So within the next 10 weeks, I will have an additional 60 grand, which works out about right. I make about 20k a month, yeah? So that works out about right. So for me, yeah, that's great, right? But for the guys who have got their compound sheets, they're like, oh, Lee, you're so shit at trading. You should be like a multi-millionaire by now because you should be risking 2%, mate. Yeah, okay. You try fucking risking 2%. My arse would literally fucking fall apart within seconds. If I entered a trade at £1,600, £1,700 a pip, my arse would be wincing within seconds, right? I can tell you that right now. The biggest trade I've ever taken to this day, actually, no, that's a lie. I've taken a bigger one now, but I hadn't, right? So before Wednesday, the 14th of December this year, so if we were doing this a couple of weeks ago, the biggest trade I'd ever taken to date was at £229 a pip. And I made 29 grand by accident. I was meant to be trading at £29 a pip, but I hit the 2 twice. I had enough margin in my account for the trade to go through, and I shorted Kiwi at 69.50, and Dairy News came out for milk. And I entered that trade, and my spread was like £700, and I absolutely shit my pants. I did not know what was fucking going on because I thought, oh my fucking God, what's happened to the market all of a sudden? Is my CMC not tying up with my chart that I'm looking at? I had no fucking clue what was going on. This is when I was still part-time. I was still working in retail. I was still a retail manager within M&S, and I was like, what the fuck is going on? And then all of a sudden some news came out and it went flying into the green. And that is the fucking luckiest day of my life. Because if that would have gone the other way, I'd have blown my whole account, right? And I probably would have quit trading. That's the honest truth. And so the luckiest fucking day of my life was my biggest trade to date before literally 2 weeks ago. So literally I got fucking very, very lucky. And another thing I got lucky with was when I started trading as well. So I started trading in 2014, started trading with live funds in 2015 in April. And in April in 2014, EuroCAD was like the main thing that I focused on. It was like my first proper pair that I really kind of focused on. I was like, yeah, this is my baby. For some reason, I was drawn to EuroCAD. I don't know why, but I was drawn to it. And I noticed something that was happening with it every single day. Very similar to the strategy I trade now, in terms of like the breaks and stuff and the movement and all that kind of jazz. Yeah, so it was very, very similar to how I trade now, but I noticed it was happening nearly every single day. And I was like, fuck me, this is doing the same thing every single day. I'm like, this is a money spinner. I was texting my mates. I was like, guys, I think I've just found a way to make like free money. And at the time you get really excited as a trader thinking that you're going to be like the fucking next Warren Buffett or something. But it obviously isn't the case, yeah. But I started trading in April 2015 with live funds. Look at where the market is in April 2015. I was just fucking buying it every day. And I was fucking cleaning up. I was waiting for the dip every single day, and then I was just fucking buying it. I was like, right, I think the low's in. I'm getting long. And I fucking cleaned house. Like within a 6-month period. So between like here, it was around here, just before April. From around there to there. Yeah. So that 5-month period there. And then this little consolidation here. I quit my job in November. Where are we? There. So this portion here where we aggressively rallied up, and then this little move down here, once we tagged this level and started moving down, I made about 90 grand. And for me, that was a hell of a lot of money, right? A hell of a lot of money. This is before ESMA was a thing. This is before anything was really a thing, you know, the regulations and stuff. This is when you had 500 to 1 leverage, whether you had a pro account or not. Yeah. And I made a fuck ton of money really, really quickly. And I thought, I'm so fucking good at this. I'm just going to quit my job. Yeah, I'd made like over double my old salary, and I was like, yeah, fuck it, I'm out. And I literally just walked out of my job. I got pissed off one day. I was in there. I remember like one of my colleagues really fucked me off. I just literally went on the computer, typed up my notice, put it on the fucking desk, and I just fucking walked out. I never went back. Like to this day, I never went back. And what was really funny is one of my close mates, his older sister, she was a manager as well within M&S. And she had to deal with me walking out, and she still fucking gets upset about it when I talk to her. She's like, I can't believe you fucking walked out and I had to deal with it. I'm like, well, fuck it, I'm all right, ain't I? So, but yeah, so literally just completely walked out. And after doing that, like, I've never really looked back, to be honest. One thing I did do, I made a lot of money the January. So I quit my job in the November, made a hell of a lot of money in the January, and I took 3 months off. That's the worst thing I ever did. So I made a load of money in the January, and then I took 3 months away from the market. And when I took those 3 months away from the market, when I came back, I lost a fuck ton of money. Well, not a fuck ton, but to me at the time it was, because I didn't have any other income coming in. So I thought, how can I stay in touch with the market so that when I have a good month, I don't just fuck off and go and do whatever I want? So I think that was the problem, right? So I think what was happening was I was making a lot of money, and because I was, 25, 26, I was kind of like, I'm making decent money. Well, I was a bit older than that. I was about 26, 27. And I was like, well, fuck it. I've been working all these years. I just want to chill. And I literally took 3 months off. And then I came back and I just pissed it all away. So I'd make like loads of money in January, took 3 months off, came back in the April, and I lost like 18 trades in a row. And that's super rare for me. I wasn't even moving my stops to break even. I wasn't even trading my strategy anymore. I was just buying and selling on the 15-minute charts when I felt like it. That's the honest truth. And I remember having a conversation with Saeed, Trader SZ. You guys probably know who he is. I remember having a conversation with him when I first sort of like came back. I was like, I'm really struggling at the moment. He goes, well, you must be doing something differently. And just by him saying you must be doing something differently, I went to the drawing board and I was like, yeah, I'm not even doing my strategy. I'm just fucking YOLO trading. And from that, obviously, then I got better. So yeah, that's kind of how it happened, really. I got back to kind of what I was doing best, and then I said to myself, right, how can I stay focused and stay trading and keep trading the market like all the time? And I decided that the easiest way for me to keep my focus was if I had people that I had to help trade, because then I'd have to have like some knowledge of what's going on, and I'd have to be there day in, day out. And if I do a daily session, that would mean I'd have to get up every day to trade, and then I'd have to do my daily session. So it was very much that kind of approach. I was like, right, well, as long as I get up every day, I can do my daily session. And then from there, I'm just plodding along really now. I'm like 7 years in, and it's fine. Don't get me wrong, it's stressful, it's lonely, it's boring, but nothing pays like it. So it is one of those, really. It's hard, but nothing will ever pay you like trading will pay you if you nail it. And back to what I was saying about this whole risk thing, right? You don't need to risk crazy money to make good money. You really fucking don't, right? So if you're one of these guys who's got an FTMO account, don't fucking risk 2% trade. There's no fucking point, right? Stop pissing in the wind. Like, you don't need to risk 2% to hit the targets that you need to hit with those companies, right? If you get a good strike rate, how much percentage do they want a month? I don't even know. It's like 10%, right? Let's say you've got a 60% strike rate, right? And you're risking 0.5% trade. you still hit their monthly targets. Yeah, you're risking £500 a trade. Yeah, roughly per month, you would take about 20 trades. So roughly per month, you'd be making on a 100k account, you'd make about 7 grand. You'd get 5 grand of that. That's an extra 5 grand a month that you wasn't getting before, right? With that 5 grand a month that you're getting, or whatever the percentage cut is, yeah, you can either size up a bit more. You know, you can go for 1% risk if you find that you're consistent enough where you wouldn't lose too much money, right? Because there's obviously times where you might do your ass, right? Because your daily limit is a certain amount. I'm very aware of that. And all it takes to go over your daily limit is to have one bad day. And even with a 60% strike rate, it's very easy to have a bad day. Yeah, this is what you need to understand. And this is where they get people. So yes, you can make crazy returns, right? But they also get you with the fact that it's very easy to have a bad day. So that's why I say to you guys, risk as little as possible whilst making it meaningful money. So if it was me, I'd probably do something like that. £250 risk per trade, go for £500 a trade. Yeah. And I'd take it really steady and just grow it. Yeah, just grow it. Just steadily grow it. Because if you steadily grow it, what you can do, you can get 3 of these accounts running, right? Because I think they allow you to have like 3 times 100 or something. I'm not 100% sure all the ins and outs because I don't have one. But you know, if you've got 3 of these running and you're making 4 grand per account, you're then making 12 grand a month, right? And you get 80% of that cut, right? So if you're getting 80% of the 12 grand, what's 10% of that? 1200. So 80%, take 2400 off. You're getting £9,600. You then have to pay tax because you have to invoice them. So you'd have to pay tax. So on that 9,600, what's that a year? Just under 100 grand, right? Is that right? I don't even fucking know. Or just over 100 grand. So you're looking at probably only a take home of about half of it once you paid the fucking tax man because he's a robbing bastard. But it's still decent, right? It's still decent. And I think you can get bigger accounts than 100 grand. I think they do bigger accounts. But my point is, don't, just because these companies, what's it called? FTMO. Yeah. How it works. Yeah, don't get too carried away with what they offer. It's 140 grand. So for 140 grand, it costs quite a lot of fucking money, actually, doesn't it? If you go US dollars, I'd go for a 200 grand US dollar account. Or, I suppose it's exactly the same, isn't it? It doesn't really matter. So I'd do it in pounds if it was me, right? To have a maximum daily loss of 7 grand, that is fucking absurd, right? That is an insane amount of risk per day that they let you have. That is a fucking insane amount. You do not need to even risk half of that to hit that. To hit your profit target. You could hit your profit target risking 2 grand a day. £1 grand a day, you could hit your profit target. £1 a day, making 2R. Now, you're not going to make 2R every single day, right? But, you know, if you just review like a week's worth of price action, yeah? So let's go. Just get 5 days worth of PA. 1, 2, 3, 4, 5. Yeah, that's fine. So we need to go from, when did I say we need to go from? 22nd, which is, that's the 21st. So that's the 22nd. Right, so we're going to just do 5 days worth of PA, right? So in theory, yeah, you'd be executing a trade there because Asia high's not taken, Asia low's taken there. You could take the retest for a lower to try and take out that low, but realistically, you're probably only going to be taking breakouts, right? Let's just say that's all you do. So you go for a break, right? You only take 2R there. So you take that trade, your stop goes below there, so you've got 258, so you're looking for 516. 516 is there. So there's your 2R, right? You take your money, you walk off. Yeah, you made money that day. Following day, you got a rounded retest, failed breakout to the upside where you probably execute a long position. Yeah, to just try and take out this high. This day here, you'd only have a 176 stop. And once you've taken that out, again, you've made your 2R, you've walked off. Yeah, you're 4 grand up. right? Because you're risking $1,000 a trade. So you're making $2,000, $2,000. Yeah. This day, again, same applies. Another $2,000 there, quite comfortably. This day here, another $2,000 there, comfortably. You're $8,000 up. So 4 days in a row, you've pretty much made money. This day here, you'd make money selling because Asia high's taken. You'd make money on the sell position. This day here, you wouldn't make any money unless you took a short position at the retest. But again, if there's no trade on that day, that's fine. It's not a problem. This day here, I can't see the Asia high and low, but it looks like the Asia high hasn't been taken based off that price action there. So you probably wouldn't take the short position here. You might, depending on what price action's doing. But again, you need to look at the PA. But the point is, this is one market, and the market gives you plenty of trade opportunities to get in and out and make money, right? And this is only going for 2R, right? You could have just took this trade, held it all day, and passed your challenge in a fucking day. And I think that's what a lot of people do. I personally think one of the easiest ways to pass these fucking challenges, now correct me if I'm wrong, because I've never done them, you sign up for 2 different ones. Yes, you sign up for one with FTMO, one with the other company. Yeah, you go to something like the DAX, you go one way on one way on the other, whichever one passes, happy days, I've got a funded account. As long as it's not a choppy day, you're going to fucking pass it. And I know that sounds really fucking stupid, right? And it does sound fucking stupid. Brian, your microphone's on, I'll just mute it, don't worry. I know that sounds really fucking stupid, but it would fucking work. It would 100% work. Right? If you just fucking longed it and shorted it. So you're long in here and you're short in here. Yeah? One of your accounts is massively offside. Yeah? But your other one is absolutely fucking cleaned up. So you've then passed your FTMO challenge in a fucking day. Right? If you risked your daily risk limit on both of them. Yeah? Now, it's a very gambling approach in terms of doing it. But if that's what you wanted to fucking do just to get a funded account, it would probably fucking work. Right? And I know that sounds really fucking bad, but that's the bottom line, and it's the fucking truth. If you really wanted to fucking just YOLO gamble it, that'd be how I'd do it. Just fucking coin flip it. No stop on any of them. Do you have to use stops through those companies? I don't even know, right? I just no stop on all of them. Limit. Just fucking limit it. Your leverage is like 100 to 1, right? Go in at £100 a point. Just absolutely fucking limit it. £100 a point on both of them. And as long as one of your positions goes in on side enough, you're going to pass your fucking challenge. Sounds stupid, but it'll probably fucking work. Right now, as I said, I haven't gone into any of that shit. But it's definitely achievable. Yeah. It's not the right approach, but it's the approach if you want to get funded real quick and you don't give a fuck how. Right? The best approach, in my opinion, to get funded is to either have your own strategy, get consistent. Yeah, have your own strategy, get consistent with it, and properly understand how the market moves. Yeah, so get a proper strategy in place, really work out how it moves, right? So like, for example, yeah. Have a strategy, yeah. So my strategy is very simple, yeah. So you sell it on the break, yeah. Another example of it there, another example of it here, another example of it there, all annotated, right? So get some data, go back and get some data, find some data where you can have a strategy, where you can have it where it works really, really fucking well. Yeah, see those patterns appearing all the fucking time in the market, execute accordingly. Yeah, have a couple of strategies. Have a strategy for one method, have a strategy for another method. So it's a different strategy. Yeah, have all your strategies written out so you know what you're looking for. Yeah, have every single strategy that you're looking for written out in terms of trading. Yeah, everything that you want to fucking know about the market, you need to know. Yeah, there are so many things that you can do within the market to make money. Yeah, now, whenever I show people some of these things, they're like, oh, what do you use that moving average for? That was just on the fucking chart when I made the spreadsheet. I don't use it, right? I don't even know what it does, but it was just there, right? But the point is, like, people get so carried away with what things are, right? So if I was to load up a chart and post it all over Twitter or Facebook or Instagram or wherever the fucking social media people are these days, TikTok, all the Zoomers are on there, aren't they? If I was to like post something, right, something like, well, actually, if I was to post this chart here, just that part, yeah, or even, shit, wrong one. If I was to post that, yeah, and I was to post that, yeah, I can fucking guarantee to you, yeah, that this picture here would get way more fucking likes, retweets, and shares and all that bollocks because it's all pretty and there's a little cross there and there's a tick there and there's a block there and prices come off it and there's an arrow there and who gives a fuck, man? Like, literally, it doesn't matter. You're there to make money. Like, honest to God, though, that is what society's like now. They want to see this, whereas the reality is that's what's going to make them the fucking money. You don't need any pretty fucking artistic pictures. Yeah? That's all drawn up nicely. Don't get me wrong. It shows exactly where I'm looking for price to move from. It shows all the levels and whatever. But the reality is, it's just that marked up. Like, literally, you could go to those charts and make that look exactly the same. Right? You could just go there and just be like, oh, well, there's our block term breaker. Just here. This is our level where we'd be looking for price to go up from. These are our stops that are resting. These are our stops that have been taken. Oh, look, I just got loads of Twitter likes or whatever it is, right? Like, the frustration is that people just think that just because someone can mark up a chart means they can execute. And the majority of the time, they fucking can't, right? There are not many people that I trust. Let's just put it that way. In the land of Twitter. I trust Saeed, trust WMD, trust Tom Dante, trust Dom. Don't really know anyone else that I trust, if I'm honest. I don't really pay any attention to them either. I think that's probably part of the problem. I don't spend that long on Twitter. You know, if you look at who I follow, it's not a huge list. I don't even know what that is. That's a charity. Okay, so I follow a charity. I follow her because she's quite hot. She's a Sky Sports presenter woman. She's quite fit. She does like darts and stuff. This guy's some crypto guy. This guy's some crypto guy. This is some Safe Moon garbage. That's a guy who plays League of Legends. Like, literally, that's a YouTube guy. Like, I don't follow that many people. These are footballers. I really don't follow. That's a Spanish football team. Like, I'm not, like, these are people who have been in my trade room or are in my trade room or friends and things like that. I don't follow an awful lot, right? And you don't, one thing I would say, don't get too fucking carried away with Twitter, right? I will tell you that right now. Do not get too carried away with Twitter. He's a very good trader. There's Saeed's thing. Will's really good. Dom's good lad. And then obviously Tom. So, like, Saeed's there, Tom's there, Dom's there, and Will's there. They're the four main people who I know who trade and are decent at trading. I don't really, you know, I've met Will and Tom and Dom. I've met all of them in real life. We had like a trading meet up back in fucking hell. Must have been 2016, 2017. It was a long time ago. We all went to London and went to some cocktail bar and Tom was drinking women's cocktails. But we had a good laugh. David Cooper came as well. He's a good lad as well, Dave Cooper. But yeah, like, you know, trading's one of those things. And it doesn't matter whether you've got 1 million followers. It doesn't matter whether you've got 5, right? One thing you need to understand about trading is as long as you're happy with your own performance, that's all that fucking matters, right? I make 5K a week. It's not a huge amount of money. It really isn't in the grand scheme of things when it comes to trading, right? 5K a week, 20 grand a month, that ain't a lot, right? But nothing's going to pay me that sort of money. And that's where it becomes important. And people say don't trade your P&L. People say don't look at the monetary value. Just focus on the percentage gains. There comes a point where the monetary value becomes relevant. And the reason why I believe that is because if you are 4% up in a trade and your 4% is 40 quid, yeah? And if you are 4% up in a trade and your 4% is 40,000 quid, you're going to have a very different approach to how much of that money you want to take off the table. Because if you're only 40 quid up on a trade, you don't give a fuck if it comes back and stops you out for 20 quid. You don't give a fuck if it comes back and stops you out for break even. But if you are 40 grand on side, you give a lot of shit whether that comes back or not. So I think something that's really important is not talked about enough is trading your P&L. As much as people frown on it, I think it's something that's actually quite important to do once you get to a point where you're making decent-ish money. I will sit here and say I trade my P&L like a motherfucker, right? Once I'm 1 hour up, I do not let that come back and stop me out unless it's for no loss whatsoever. If I go up £1,000 in a trade, I will lock in 250 quid, no matter what. If price comes back down and takes me out for 250 quid, it means I've made 250 quid, right? I will sometimes do that 7 or 8 times a week. Yeah. But by doing that 7 or 8 times a week with shitty entries, yeah, all of a sudden, I've got an extra 1,750 quid for the week, which other people haven't because they're too busy trying to be right. It doesn't fucking matter whether you're right. You're here to make money. Yeah. Is it worth you getting out of bed to make 20 quid a day? No, it's not. So I feel like you need to trade at a size that's relevant. And like I said to you before, you know, you don't need capital to trade. That does remain true. You do not need capital to trade, but you do need capital to make money that's relevant, right? So the fact that there's these FTMO things now that exist, they give you the platform to make the money you need to make to be able to risk the money you need to risk to make the money, right? So if you don't have loads of money, but you have enough money to pay someone for mentoring, let's say you've got enough money to fork out, I don't know, 600 quid a year on mentoring, or £1,000 a year on mentoring, or 1,500 quid a year on mentoring, where you get proper mentoring and guidance and coaching and stuff. And then you've got £500 to do accounts with. So you've got £2,000 or £3,000 in total. You are way better off going down that route and properly learning from someone like Tom, WMD, Saeed. Learn from someone who knows what the fuck they're doing with their own strategy. Yeah, when they're accepting new people or whatever. Learn from these people. If they've got a proven profitable strategy with some form of a track record, it doesn't have to be fucking all glittery and sparkly or anything like that. Just some sort of track record that's half decent. Yeah, even if they're only making 6 or 7% a month, that's still fucking huge if you can do that. Right? If you can return 6 to 7% a month, that's massive. Might not seem like a lot because the people on Twitter make fucking 100% a month. Yeah, it's very easy to make 100% a month. Yeah, it's very, very easy. Look, I'll show you it right now. Did it like 3 months in a row, but I was over leveraging like fuck. Here you go. 94%, 273%, 43%. Average that out, that's over 100% a month, right? But the reality is, once you drop that down to a level where it's decent risk management, yeah, as soon as you cut the risk, yeah, over leveraging, normal leverage. Look at the fucking difference, right? Over leverage, normal leverage. It's fucking huge. The difference in leverage is insane. Yeah, and that's part of the problem. And you know, people do have down months. There you go. Look, 4.47%. I lost a bit of money. Boo fucking who? But then I made shit ton. So it's like, it's really important that you understand that no matter how well you trade, you are going to lose trades. You will never win every single trade you take. And that is something that people need to get out of their fucking head right now. Anyone who says to you that they have pinpoint accuracy, I can say that I've got pinpoint accuracy. Did I fucking execute this trade? Did I fuck? Right? Sometimes I will. Don't get me wrong. Sometimes I will take the fucking perfect trade. Rarely, but I will sometimes crack like a fucking beauty like this, right? I will sometimes fucking crack it down here. Once it starts moving away, I'll crack it like there, stop below there, aggressively manage it, and I'll fucking clean house, right? Now and then, I get the perfect trade, right? You do. Sometimes you do catch that perfect trade, but it's not an everyday thing, right? It's not an everyday thing. The market's too choppy to get the perfect trade every single day. You can see it here. You know, some days the market goes without you at like 6 o'clock in the fucking morning. It goes really early, right? There's some days where the market's just gone. Here, look, that's just fucking gone. 7 o'clock. Like, it's just absolutely gone. If you look at gold this morning, it just fucking went here. I'm not even awake yet, and gold's fucking gone. So I can't trade gold today unless we break through under here. And the fact that we break through here, I'd probably got stopped out there or had to aggressively cut it for a little loss. Then I probably would have had to aggressively cut it again for a little loss. Then I would have probably aggressively cut it again here for a little loss. Then I probably would have given up with it and had enough, and then it would have went exactly where I wanted it to fucking go. That's what would have happened today if I traded gold. I'd have done my ass a bit, fucked off to the shop and made dinner, and then it would have gone without me. And it happens. You get days like that. You get really shitty days. But until you learn how to cope with them and how to deal with them, you know, you're pissing in the wind. You need a proper strategy. And it doesn't matter whether the market's going up or down, right? This whole bullish and bearish bullshit, it doesn't fucking matter. If you're trading on a real low time frame, all you're doing basically is trading fucking noise, right? You're looking for a burst of volatility. When you see that volatility, whether it's going up or down doesn't fucking matter. It's whether you can A, get in safely with a decent stop loss, and B, get in and make money out of it. And once you learn how to make money out of those little bursts of volatility, that's where you start really kind of developing an edge, right? So like here, yeah? So this example here is obviously shit because it's not a great time of the year, 28th of fucking December. But again, here, yeah, we come up, we take that out. Then in theory, I should sell there, right? But it just chops around. So I would have sold that and then got out because it's just sat in there for too long. But then when we swept both sides of the market, so this has been swept, this has been swept, both sides swept, right? So then now when we come back above, I'm looking for a long to take out this high. Once we fail to take that high, I collapse it. Yeah, and then I look for the same again. And I do my arse. I would do my arse here. Right, if I'm only looking at this one pair for the day, I would do my shitbox multiple times before I then got paid. Right? But the point is, as long as when you get paid, you're getting paid more than you're losing, net you're going to be up. Right? Losing is part of trading, whether you like it or not. It is a huge part of trading. Fucking huge part. And there are so many people out there who are obsessed about being right. Like crazy obsessed about being right. And they get really upset if they're not right. Like I had a guy in my trade room, right, who was trading gold. He was up. Let me see if I can find the conversation. Wait a sec. I'll be right back. Let me see if I can find the conversation. I'm sure he won't mind. I don't know whether I'll be able to find it, though, because it was a very, very long time ago. Let me just have a look. No, I can't. Fuck. Okay, it's gone. Slack only holds a certain amount of data, and I'm not paying a fucking fortune to run that shit. But basically, he traded gold, right? And we joke about it. We joke about TP3 with him all the time because he was one of these guys who has a take profit 1, a take profit 2, and a take profit 3, right? These are kind of like not really scalpers. They're kind of, I would say it's probably like more swing traders, right? He'd have his TP1, his TP2, and his TP3, right? It was ages ago as well, so I'm not even going to be able to find the PA. But an example of it is this, right? Right. Support resistance, support resistance, support resistance, support resistance. Chart, yeah? This is the chart. He enters his position here, yeah? He longs it here, yeah? TP1 is here, yeah? That's TP1, okay? TP2 is here, okay? TP3, I don't know why I put a B there, but, you know, we'll get over that. TP3 is here, and it's also like ATR, right? So it's got confluence. It's got like a really big level there, right? It's beautiful, beautiful level, right? He's long on gold. His stop's here, yeah? Price has hit TP1. He's risking 2% a trade. He's now 2% up, right? He's now 4% up. He's now back to break even. He's now 2% up. He's now 4% up. He's now 5.5% up. He's now back to break even. He's 2% up. He's 4% up. He's now taken a stop out and he's minus 2% for the day. I shit you not, this actually happened, right? He was up 2%. He was up, like, he was risking 2%. Yeah. So he was like 4% up. Then he was 5.5 up. Then he was 4% up. He didn't take any money off the table at any of these positions, and he took a full fucking 2% loss on the day. And it took him 2 fucking years, yeah, to stop having this TP3 bullshit. It took him 2 years, despite me fucking drumming it into him all the time, to stop this TP bollocks and just take his fucking 4% when he made 4%. He just wouldn't fucking listen. He was so set on being right and price going to his TP3. He was so fucking set on it. Like, he was actually so fucking set on it. Right? And it's literally a fucking running meme in my trade room. Like, he was so set on it that we have a fucking TP3 emoji. Where is it? There it is. We have a fucking TP3 emoji in the trade room because he was so fucking set on his TP fucking free. He was so set on it. And like, even to this day, he still talks about TP1, TP2, and TP3. However, he has got a lot better at just taking profit and walking away. But you always know when he's done his arse because he's usually very, very chatty. And then all of a sudden he goes quiet for a few days. That's when he's done his arse. And you will find the same with a lot of people that you learn to trade from or that you trade with, or like even people that you just like network with who trade. When they're having a really good week, they'll want to talk all about it. When they're having a shit week, they will be fucking silent. Right? And trading's one of those things. And it's very much, like I said at the very, very start, it's about time and about you. Yeah? The market doesn't give a shit about you. Right? It's about how you invest your time and investing it at the right times. So what I would say to you guys is that the best thing that you can go and do is, if you don't have a set of rules, you need to have a set of rules, right? So the most important thing is have a set of rules and fucking follow them. There's always going to be times where you can bend the rules, right? This is a really good example of where you'd bend the rules right here, right? Asia high's been taken. Yeah, you'd usually look for a sell position there, but you'd want to be taking that out. But because price has rejected the weekly open and started coming bullish again, you could potentially then look for a long. Even though the Asia low is not taken, because we've come off such a key level and taken out these stops, you can still look for a long once we get back above this key level. That's where you bend your rules. Right? Because in theory, you shouldn't execute a long position there because you've already taken the break here and you should be done for the day. But because we've broken away from the weekly open and then set up for a potential long to try and take out this high and then this high, you can look for that trade. Right? And it's really, really important that you understand when to break rules. And as long as you're breaking rules based off other things that are based on your strategy, right? So I would never just randomly break the rules. So whenever I take a trade, it is always off that, off that, off that, off that, off that, off that. It will always be off one of those things, right? If I miss the entry on one of those things, I will rarely look for an opportunity to get in later. Yeah, there will be times where I will take a trade like this. So if you look at the DAX yesterday, if I don't pull the trigger there, I'm certainly pulling the trigger here. Yeah, if I've pulled the trigger here and then pulled the trade, I won't pull the trigger straight away here. I'll wait and see if we get the bounce that I'm looking for. Once I'm confident we're getting the bounce I'm looking for, I'll have a slightly worse feel, but the idea is still the same. I'm still taking the trade off this level, right? So that's the only time where I'd deviate from the rules. Another time where I'd deviate from the rules in this example here is I would trade off of this, right? The reason why I trade off of that though is because it lines up perfectly with the Asia high, pretty much, right? It's close enough, yeah? Because we're going into that Asia high level. Yeah, and then we're moving away. Again, execution there, stop below there. Right, and I'd look just to take out that first. That's all I'd be looking for. So this would literally be a 1-for-1, but high probability. Right? Really, really important. Like, really, really important. And again, you gotta forget about all the fluff and all the fucking shit. Yeah? It's just there for a visual. You could just manually mark that up. It is really, really important that you understand the basics of trading. Like, you don't need to overcomplicate it. You really don't. I promise you. Like, if you overcomplicate it, you will never make it. That's my honest opinion. You just need to keep your trading simple. The more simple you keep your trading, the more likely it is that you make money. Like, I learned so much from Tom Dante's free webinars back in fucking 2014 on Sunday nights, 2015. He used to do these free webinars. And one thing I took from his webinar was a rounded retest, right? Just a fucking rounded retest of a level. And it is so important to how I trade now. Look at this. Rounded retest, long. It's so basic, but it just fucking works. So stop being a cunt and looking for these fucking stupid Ichimoku clouds and all this other crap that exists in the market, in my opinion. Don't get me wrong. For some people, it might work, right? But for me, it's just a load of shit, right? It's just all a load of shit. Like I said to you guys at the very start, you can make money just off 2 fucking lines on the chart. Right here. You can make money just off 2 fucking lines on the chart. We've already been through it. We've already gone through the price action. You know, when price is above both lines after this line, you look for longs. You make money there every time. You never short it because it doesn't get above them. You only long it. You've made money today. Congratulations. So you can make trading so simplistic and make money out of it. It's all about your behavior towards the market and just understanding that the market doesn't give a shit about you, right? So once you see that the same patterns happen, sometimes 2 days in a row, but if you look at this, is literally exactly the fucking same. It's literally the same, man. Like, you literally can't make this shit up. It's the same. Within reason, right? You know, we've gone a little bit deeper past our daily level, but we've eventually broken up where you long it. We've gone right into a key level. We've then come up and you long it. It's so simplistic, right? And just a really basic price action kind of thing, right? There we go. We'll call it a price action kind of thing. I don't know what peonti means, but we were looking for paint. A really basic price action thing, right? You have a block, yeah? You have bearish candles, yeah? You then have bullish candles that start coming up, yeah? Once we break above this block, look for price to come back down into the middle of it, like that, dip in a bit maybe, and then start continuing higher, yeah? Look for that. Look for that move in the market where you've got a block that gets used as a block temporarily, yeah? And then we break through it and then retest and go higher. Rounded retest within a block. Yeah, very, very straightforward. Block, I call it a block term breaker, right? And you see it fucking everywhere, right? Here's one, right there. Break above, retest, move away. Day before, here's another one. Break above, retest, move away. You see it everywhere, literally fucking everywhere. Everywhere you look, that will fucking be a factor. That one, not so much. It kind of breaks straight through it. But if you go onto a minute chart, and this is the thing, right? If you go onto a real lower time frame chart, you can fucking clean up with this shit. You can absolutely fucking clean house on a minute chart. I don't trade minute charts. I use a 5-minute chart personally because it's just the PA I prefer. But on a minute chart, you can absolutely fucking clean house. The problem is, and this is a big part of the problem, the lower the time frame, usually the lower the stop loss, right? If you are risking £1,000 on a 2-pip stop loss, you are a fucking lunatic. I will tell you that right now. If you are trading with a 2-pip stop loss and going in at £500 a pip, you are a fucking lunatic, right? And yes, you can do that if you trade for these FTMO people because the risk isn't your money, right? But when that risk is your own money, you wouldn't fucking do it. Would you do it with your own money? If the answer to you doing it with your own money is no, you shouldn't really be doing it with a prop firm's money either, in my opinion. But again, like I said, they give you a daily limit for a reason. So if that's going to make you a load of money, then fucking do it. Crack on, go ahead. If you know that you can make loads of money doing that, then do it. But what I will say to you is running a 2-pip stop within Forex is retarded. Absolutely retarded. I've done it in the past. In fact, I think I've got let me have a look. I think I've actually got, and I think I think the smallest one I have on Instagram is like a 5 pip stop. It's on Euro USD. It was a tiny size. It was when I was trading smaller. It was a long time ago. Just like a little scalp. Don't know where it is. What was it? Euro yen? Nope. There it is. I had a 5 pip stop, right? And this is a long time ago. I was getting a bit cocky and getting a bit carried away, and I've grown up since then. I've had my arse handed to me enough times to realise that you can't just run a 5 pip stop. You can sometimes within reason, right? But there are times where you can't run a 5 pip stop. You know, making 20R in one trade is bonkers, right? And it's not going to happen all the time, and you shouldn't shoot for 20R a trade. Like this guy made 11R in a week, which is really good, right? 11R in a week is fantastic. You know, like Sonny took £700 to 4,900. Obviously, that's over leveraging, right? But it's about the consistency. And he had embedded that consistency, and he trades full time for a living now. And you know, there's a lot of things. You got this guy, his equity curve went up, and it's like he's saying thank you to me, but the reality is, it's him working hard with what I've given him. You know, again, it's like Tom. He was doing 500 to £1,000 a week. Now he does about 4. He does way more than that now. I think a lot of people in my trade room make more money than I do, but I'm not really bothered about that because I'm in no rush to make a load of money. Right? I'm young still. I'm 34. Do you know what I mean? I've got plenty of time. I'm going to trade for another 11 to 16 years. So I'll either trade until I'm 50 or trade till I'm 45. It depends how much money I have. But again, I will probably always trade a little bit because I don't have to sit there and trade all day every day, right? And I don't have to sit there and trade for hours on end, right? Like I said to you guys, there's a window where I look for moves within the market. And if I find those moves, I execute. If those moves aren't there, then I don't execute those moves in the market. It's very simple. You know, if I can't get the moves, then I won't trade. I'm not going to just trade and pluck a trade out my arsehole if the market's not playing ball. If the market's not playing ball, I don't kick the ball, right? So if Euro, for example, if Euro GBP is acting like a bag of shit, right? So you do sometimes get these days where it just consolidates all day within the bit where so like this. If it's acting like a bag of shit like this, I won't go fucking near it. And you do, there you go. If it's doing that, I ain't touching the market that day for shit. Yeah? But you don't know that that's going to happen until you start getting involved, right? And once you start getting involved and find it being a bit choppy and a bit shit, you say, right, actually, I'm just going to fucking walk away today. Because what you're looking for a much cleaner, fluid move, right? Whether it's a retest to take out the low from earlier or whether it's a break to take out the highs from earlier, doesn't matter. Like I said, long or short, I don't give a fuck. Right? What I care about is that fluid movement and that volatility, because the volatility here then gives me volatility in the pound, right? So as soon as prices come down here, come up, and then start rejecting aggressively, I then know that pound is bullish, right? So I then go over to all my pound pairs and look for longs, right? So I'm then looking for longs on pound pairs. So then when you go over to, you know, 10:30 in the morning on the 6th of December, if I'm looking for a balls deep long anywhere, I'm over here. Fuck me. Right. I'm over here like a fucking tramp on chips looking for longs, right? I'm literally looking for longs on this day here. Well, price has already gone without me, right? Because it went at 12:30 on the broker is when I realized it was longs. So here. So can I get in off there? It's okay, but it's not ideal, right? Any of the other pairs lagging behind. And this is what you find sometimes happens. One of the pound pairs will lag behind, right? So then you go back to that 6th of December day and you say to yourself, right, any of them lagging behind? So on this day here, where's the 6th of December? This day here, zoom in. Is this lagging behind? Where's the 6th? Here it is. 6th of December, I had a fucking mare, right? So it's not in sync, right? So because it's not in sync with what's going on, I wouldn't trade that either. And I would look for one that is in sync with what's going on in the market. And if there isn't anything, then I won't go near it. You know, usually my go-to is cable and pound Swiss. They're like my two go-to pairs, right? So I'd be like, right, cable, then pound Swiss. That'd be like my go-tos. So on cable, is there an opportunity on cable on the 6th to get long? Well, it rallies up, but again, it's gone too early, right? It's gone on London Open. but I've only realized that it's bullish here. But what can I get from there? I can get continuation off the Asia high, right? You know, I spoke to you earlier about the levels that I potentially look for a trade from. I can get continuation off that Asia high, yeah, to try and fill the rest of this void, to take out this level here, to potentially go into the previous day's level or aim for this stop above market or key daily level, right? Yes, we come up, hit that, and then start rejecting. So I'd end up collapsing around here somewhere on one of these down candles, but ultimately that's what I'll be looking for. Then failing that, if I don't get in here, when we retest here and I see it start pulling away again, I can long with the aim to take out that, then that, then that. Once we take out that and then start coming up, as long as we sit within that and then start making the next leg up, I then work with that, right? So again, goes back to blocks and breakers. And yes, I know that a lot of people say it doesn't work, but you put a fucking line through the middle of it. If it looks like a decent level of intraday S&R, yeah, I don't give a fuck whether they work or not. I couldn't care about what they are, about what they do. If it looks like a decent level of support and resistance intraday and it helps me make a decision, I will use it. If it doesn't and it looks like a bag of shit, I will not go near it, right? I don't give a fuck. I genuinely don't care. You're here to make money. You're not here to worry about why things happen in the market. There are so many people that sit there and they're like, oh, well, why does that happen? Why does this happen? Why is there a stop rate? Why does this happen? No one cares, right? So why do you? Like, just stop giving a shit. Because it's irrelevant. It's completely fucking irrelevant. You're here to make money, right? You either want to make money or you don't. And unless you develop a strategy where you can make money and completely rinse the market, then that's up to you, isn't it? But I can guarantee to you, if I posted both these pictures to Twitter, right, this one would get more likes. Should we do it as an experiment? Keep an eye on it, guys. We're going to do it. Oh, where are they? I'll just write beauty. And then we'll do another one. Don't troll it either. Don't like it yourself, because then that will just kind of, well, if you all like it, it'll change it. Yeah. Beauty. There we go. We've posted them both now. See what happens. Give it like 2 weeks, because I never use Twitter, so no one follows me. So yeah, just I could be wrong, but if someone who's actually got followers is in this webinar, send me a message and I'll send you those 2 pictures, and then you can post it and see which one gets the most fucking likes. I can guarantee to you the one with all the fucking ticks and the order blocks will get more fucking likes. I can guarantee it. Right? I can guarantee it. Yeah, no worries. Happy New Year to you too. Whatever that says. But yeah, have a good one. But other than that, that's it.